You know, David, if you wanted to have one person to talk to you about the crazy world that is oil right now,
yes,
Mike Wirth.
That's who it would be. That's who I would pick.
And he is Chevron's Chairman CEO, and he reported the highest quarterly profit in at least 6 years. Of course, surging crude prices, you paid for that at the pump. And joining us to discuss it is none other than Mike Wirth. Mike, thank you for coming on our show.
Good morning, Jim.
All right, so Mike, you have always talked a lot about the great buyback and the dividend. This quarter, you spent a huge amount of money trying to get the balance sheet in great shape, paying down debt. Why did you choose that method of allocation? Because I really want to know this, because you did not go full bore on trying to find new things. You wanted to go full bore on attacking that debt.
Jim, the quarter really was about consistent execution, strong production, and record U.S. refinery throughput. Our key assets around the world ran at or near full capacity. In the U.S., production set an all-time record at nearly 2.1 million barrels a day. Global production is up 20% versus the same quarter a year ago, 5% versus first quarter of this year. So really strong performance in our upstream. And in our downstream, our refineries in the U.S. Had their all-time highest refinery runs. That yielded a strong quarter financially. And in a commodity business, that cash first goes to the balance sheet. We stay very disciplined over time in terms of commitment to our dividend, reinvestment in the business, maintaining a strong balance sheet, and then share buybacks as our fourth priority. But cash flows are volatile. And a strong balance sheet is your friend in a volatile industry. And so in the near term, we paid down some debt. We've got a very strong balance sheet, and we'll see how this market unfolds as time goes forward.
Now, you had done a huge acquisition, and you talk about some really pretty amazing really synergies with Hess that just sound like this was already a deal that has paid off gigantically.
Well, it's a deal that closed a year ago this month, and integration of Hess strengthens our portfolio. We accelerated financial delivery. We achieved $1.5 billion of synergies 6 months earlier and 50% higher than originally expected. The free cash flow from the Hess assets had been roughly double the incremental dividends that go with the shares we issued for the transaction. Free cash flow is accretive on a per-share basis, and we've actually repurchased 75% of the shares that were issued for the transaction already. So we've got a bigger, stronger portfolio. It enhances and extends our growth into 2030, and what was a good deal at the time looks even better today.
You know, Mike, it's David. When I hear you talk about it that way, it makes me wonder, is there more M&A out there for you? You know, Darren Woods, of course, at Exxon has talked about their desire to potentially continue to expand in the lower 48, so to speak. They moved on Pioneer, then you guys moved on Hess. Obviously, you had a little conflict in the middle as well. But I wonder, what's your approach right now? Is there more to do when it comes to buying other assets?
Well, David, we're in a resource business, and so we acquire resource through exploration and organic activity. We unlock more resource through technology, and then we can acquire assets or companies. We've actually recently signed some agreements in the Middle East, with Iraq, with Libya, that provide access to attractive growth opportunities. We're looking at potentially further growth in Venezuela. And so we're looking always to strengthen our portfolio, to add high-quality assets that will deliver production and cash flow for our shareholders well into the future. M&A can be part of that equation over time. But right now, I would say in a volatile market, deals are difficult to do. And we're focused on execution. As I said, a very strong quarter that we just closed.
Yeah.
Now, Mike, you mentioned Venezuela. In the release, you don't talk much about Venezuela, but do you think you can get up to 100? Is it 400,000? Is it 600,000 barrels per day? It's much better than anybody thought, except for you. You always knew this could be big. How big can Venezuela be, and big for you?
Well, 3 or 4 years ago, we were only producing about 40,000 barrels a day through the joint ventures that were involved in there. We came into this year at about 240,000 barrels a day. We closed the last quarter at about 280,000 barrels a day. So we've seen significant growth already. We've indicated we could go up close to 400,000 barrels a day by 2028, and potentially further. We're in discussions right now with the Venezuelan government about the ventures that we participate in, about the fiscal terms, the legal framework, and we're encouraged by the direction of travel. There's still more work to be done to finalize those discussions, but those could enable further investment and further growth.
Now, also, you did a breakthrough deal with Microsoft that I thought was one of the best of the kinds of things that an oil company, a resource company could do. How did that come about? And talk about how big that is, because it's 2.67 gigawatts.
I'm really excited about this, Jim, and you and I have talked about this with Scott Strazik back more than a year ago. We're helping to power the AI growth in this country by delivering abundant, affordable, and reliable energy to help scale AI. We've signed a 20-year power purchase agreement with Microsoft, one of only two AAA-rated companies in the U.S., for a 2.7 gigawatt power project in West Texas that will support one of the world's largest data center complexes. This is behind-the-meter power, so it doesn't increase cost for ratepayers in the area. In fact, once fully built, it should have the capacity to actually supply power to the grid and help with local supply to consumers.
Right.
It utilizes abundant Permian Basin gas. It's differentiated through the quality of the participants, the scale of the project. We expect to take FID later this year, first power in 2028, and it really leverages our strengths and creates a resilient cash flow stream 20 years into the future for us that's uncorrelated with commodity prices and the oil and gas cycle. So we're excited about this. We're in discussions. We've got other sites we've identified and in conversations with other potential customers.
Mike, that was my follow-up. Let me get in here.
Yeah.
It's not a one-off then, is it? Because we spent a good amount of time talking about it when you announced it, given the importance of it and the overall general focus, of course, on AI as well. You just indicated there's more to come. Are there other agreements just with Microsoft or potentially other hyperscalers as well?
Well, we've got additional locations that we've identified. We think this is something that our company brings a lot of value to, and we're in conversations with others. They're commercial conversations, and I really can't identify who we're speaking to, but they're the big customers that you talk about every day.
Now, Mike, were you surprised that oil didn't spike much more? Does it just turn out there was a lot more oil, or China didn't use as much? Because it is kind of shocking that you could take out the Strait of Hormuz and not see oil go to 120, 130.
It's been a very dynamic and volatile market, Jim. We saw prices surge early when the conflict began. We then saw them come off as it looked like there might be a resolution that was coming. And of course, there's been a lot of ups and downs along the way. A couple of things that have kept prices from going higher. Number one, there were a lot of inventories in the world that we were able to draw on. Commercial inventories, strategic stocks, sanctioned barrels that were on the water that were released from the sanctions. And so there's been supply that was able to mitigate some of these outages. The second thing is China really downshifted the amount of oil that they were purchasing. They had been filling their strategic reserves as well as running the refining system at a high utilization. They've stopped product exports. It looks like they're no longer filling their strategic reserves. So they've taken a lot of demand pressure off of the markets at the same time as we've seen some of these buffers help with supply. That's bought time, but it hasn't resolved the fundamental issue that we've got disrupted flows in the Strait, now in the Red Sea. There have been some issues in the Black Sea. And so the system remains under a lot of stress. And it's been really important that the U.S. has been as a key a supplier and able to help the rest of the world mitigate outages on both products and crude oil. So stay tuned. It's a difficult market to predict as we move forward.
Gotcha. Okay, so Mike, I hope to see you soon. Thank you very much, Mike.
I hope to see you soon as well, Jim.
All right. Thank you so much for coming on the show.